Good morning, everyone. It is August 3rd of 2024, and I am here with Ford Grid Kid, and we are going to go over the base package for our group, and that is we like to focus on the Ford ETFs because it helps traders focus on the market. As you can see here, I have a 3-month daily chart for SPXL, TNA, TQQQ, and UDOW, and we keep it really simple around here. And one of the things that we focus on is the trend of the market. And we determine the trend of the market by not only looking at the bigger time frames, but when you drill down to it here on a daily, you can see that if we're below the green line here, the trend is down versus if it's above, it's up. And by just keeping it simple, we're able to get in and out of a lot of our positions quickly. Uh, the market kind of threw us a curveball here over the week, and that is where we had TQQ here. And let me just bring this up. You can see how we had this huge sell-off here in TQQQ, and then we tried to get above the 10 right here. We we closed right at that level, and then the next day we tried to gap up and hold it. But the thing is that this area of interest right here, this 70.33, you can see that we could not get enough buyers to take it up and fill this gap. And so what happened? They ended up reversing the thing and selling it all the way off. Now keep in mind too, we had a lot of news here as well as far as what the Fed was going to do with the interest rates. But in the end, just know that we took this trade to the long side because going into this day right here, we were above the 10. And then for those of you who took it, you know that you have to have a stop somewhere to protect yourself. And hopefully, if you did that, you had it somewhere in this area, whether it be below the 10 or even below this candle. But the moment we did that, the moment we took out this low here of 68, what is that, 66.38 right here, the strat gave us a new signal down. That was a 3 right here. So hopefully, not only did you get out, but you also reversed the trend or the trade back down, because once we did that, the target was down here to 6107. And so one of the questions that I've had is, how do you play this with an option? And the easiest way to do that, if you have a small account, and I know a lot of you have accounts less than $1,000 and you insist on trading options, let me show you what that looks like with TQQQ, and then I'm going to point you in a different direction. So with TQQQ, when I trade an option, I like to trade 3 months out, usually in the money. And if you look at that here with TT or TQQQ, you can see that 3 months out here in the money is right around $1,000. Okay, now that's factoring in the move already today, but this right here is usually your entire account or too much for most people. So what if we could get you into a play that was more affordable, but yet moved uh, pretty much the same way, but it was an inverse? And what I mean by that is TQQQ is for the bullish move up. But what if we got into SQQQ? And you can see that this is the inverse to it, and that the options on this are more affordable. Oops, let me get this to SQQQ. Okay, so now 3 months out, you can see that these options are right around 25% of what TQQQ is trading for. Now, keep in mind that this spread is is wide right now because the market is closed. This is more or less just an example to give you an idea that if you insist on trading options, of how to do this affordably and to buy yourself some time, right? Because let's just take a look at this option here. Let's go back to our chart. This is the daily. And so we said that this was the signal right here on July 31st at, we'll call it $9. Okay, so let's go to that option right here, December, at the 9 right here. I'm just going to copy this option and we're going to go back to the chart and we're going to look at this. And this is going to give us an idea of how much that option really costs. And this is July 31st right here. So the moment we triggered right here, this option was a $1.50, $1.46, $1.50. And now you have time. So if you bought this option at $1.50, and if you wanted to trade it back up to here, chances are you already hit target, and that option is now worth $2.32. You could have taken it all off the table, or if you had $1,000 account and you just bought 5 contracts, you could have peeled some off at this level at $1.78, at $1.91, and then you could have been completely out of the trade here at 234. But make no mistake, the objective for this is to come back up to here and take out 280. That's how I would trade an option. All right, ForGrid, any questions?
No, this is perfect. This is exactly what I want.
All
This is
right.
exactly what I want.
So for me, what it comes down to when I take this trade is risk reward. And if I have a smaller account, there's absolutely no way I'm going to dump more than 25% of that account into a trade. Does that make sense? You never want to
Yep.
go all in. You always want to kind of take the risk and reward for what it is, because I mean, it would really suck that if you ended up losing $250 on this thing. But here's the deal, because you bought out in December, you have time for that trade to work, because when you pull it back here just for SQQQ, let's look at the big picture here, okay? We can see that this trade, let's just look at the weekly here, because I know ForGrid is a big weekly guy. Look at this pivot machine gun all through here that we have the potential to take out all the way back up to here. And here's the thing, if you had 3 contracts or 5 contracts and you've already peeled off 2 and you have a runner, you're trying to get up here, because if you can get up to this $13 area where that target is, that contract is going to be worth a lot of money. And so how do you protect yourself after you peel off 2? Very simple. You put the last contract, the last stop, right at the bottom of that candle. That's it.
Mhm. Okay.
Simple stuff.
So, so for the newbies out there, I would suggest just try this with one. Don't be going in with five or and peel off. Just try it with one and continue from there. If you have success, maybe a couple times, then go to 2, and then go to 3. But don't jump in with 5 right away. That would
Exactly.
be that would be my suggestion.
Exactly, because for those of you who have been part of the group, you know how I draw previous high and previous low, right? Right there. And so you
Hmm.
can see the moment that we reversed right through here, we took out the objective, and that was to take out 848. And then look at what happened. Price immediately reversed, and then it gave us a signal to go long just with this trade alone. And we hit target right here. I'd be out of this trade. And the best way to build consistency and confidence is to take these small base hits, these small wins, and to just enjoy the moment. I think sometimes as traders, we always want to swing for the fence. That's swinging for the fence right there. But I can tell
Hmm.
you that when I get into a choppy market like this, I am taking singles or base hits or small gains all day long because they add up.
You know what they say, Phil. Base hits puts you in the Hall of Fame.
That's right. That's right. And trading is the same way. You've got to learn how to adapt and how to see this area of choppiness, and then understand that the moment that we take out the objective to the downside or to the upside, we have the potential. You'll notice I said potential to reverse and just blow everyone away. And that's exactly what they did here in the last 2 days. They took out the last 6 traders, or 6 days of trading right here. They just blew it away like in half a day. It was amazing.
Yep. Yep.
But
Beautiful.
that's all I wanted to go over. I want to try to keep these videos nice and short. So for grid, great question. Thank you for joining
Great.
me, and
Thank you.
I hope other members benefit from this. So until then, take care and God bless.